All right. Everybody hear me? I think we are live now. Could everybody hear me in here? All right. I think we're live. Can everybody hear me? Okay, cool. All right. So, just really fast. Got 2 minutes until the market opens. Right now, the S&P is in what we could call price discovery mode, meaning it's at all-time highs. So there's no prices above us. There's also zero downside pressure, similar to what we talked about in the webinar on Sunday with there's zero shorts built into the market. In fact, those who keep shorting the market are just providing fuel for the market to continue to rally up. So with that, and even going over the two-step process that we went over in the webinar, um, the thought process and the setups today have to be first looking for and going for scenarios where we're looking to long pullbacks and look to long dips down. Even a setup like yesterday with the short positions, they worked. They were just very short lived. So I don't want to say it's a lower quality or probability of a setup, but the chances of downside continuation happening today is going to be slimmer until the two-step process comes into fruition. And ideally, the two-step process will begin once 63.11, that key level. It's just been a level, if we were to zoom out, the past maybe week and a half, the market has supported it. The market also has resisted it on multiple different attempts. So 63.11, 63.10 is going to be just a significant level to watch today. Right now, we're trading 30 points above it, with the intraday range yesterday being, 35 points or so. Nothing's impossible in the market. We just have to go with the information the market's telling us. And for our level to be 30 points away and the range like yesterday and a range like Friday being only 30, 40 points, the chances of that level, let's just say breaking and having continuation, again, could happen. I'm never going to say never, but the chances of it happening will be a little lower. So with that in mind, my thought process today is looking to long dips. The market's going to open here. My depth of market I reset at the opening bell every single day. So on the S&P, my first thought process until the 63.10s are broken is going to be looking to long pullbacks and long dips. If the market does rally up and we see a strong move up at this open, ideally we'll be looking for some sort of like low volume node, some sort of pullback with absorption, some sort of pullback with passive buying. There's many scenarios that we could look out for, but the market is in price discovery mode. The most important thing to talk about right here is the market is in price discovery mode, meaning it's not our job to discover prices for the market. Let it discover it. When it gives us signs of how the market feels about these prices, then we could act upon it. Let's not act upon trying to discover if the market's going to reject, if the market's going to bounce here. Let it discover it for itself, and we can react to the information once it provides a setup. So just be patient. We saw yesterday just a slow grind up. Just be very, very patient and wait for your setups. I'm not going to, again, ignore and completely remove a short side thesis out of it. But ideally, for the best high probability type of setup, I would want to see that two-step process that I talked about in the webinar for a great A-plus setup. So let's be patient. Let the market do its thing. It's been taking a little bit of a longer time for it to do its thing. So this is really when the patience and the discipline is going to have to kick in, or else you're going to sit here and force trades and you're going to sit here and feel discouraged. So just be patient and let the market do its thing. CPI is out of the way. Today we had CPI at 8:30. Pretty lackluster CPI event. I mean, the market only rallied 15 or so points from it, which is extremely lackluster. The only other major economic thing that we have this week is PPI tomorrow. So when I see something of interest, I'll make sure I mention it. But again, I'm just always going to instill patience. A good example is yesterday when we took that, or when I took that short position, rejecting the 62.94s. We got strong drops out of those levels. It's just the market failed to continue down. So if anybody's looking for a short until the 63.11s are broken, the downside is going to be short lived, which again is why I'm looking first to long dips. Not ruling it out of the picture, just understanding that's a little bit of a lower probability of a setup. One thing that I do want everybody to work on, including myself, this helps me out a lot, is that a good example is we see the market moving down right now, right? So we're like, all right, let's try to look to catch a short position, or let's look to capitalize on a downside move. But if you don't see the pattern that repeats itself in terms of your confirmation and in terms of your execution, then even though the market's moving down, this should not be something you should be taking, right? So something that I'm really trying to work on, and what I want everybody else to work on as well, is really just waiting for a good opportunity, let's just say. And a good opportunity is going to be different for everybody because everybody's going to have different setups or different systems in place that gives them the conviction, gives them the confirmation to enter the setup. So let's just say you have a confirmation right now to get short, then that's a setup that you should be taking. But if you see the market selling off 10 points as it is right now at the opening bell in the first 4 minutes, but you don't have a confirmation factor, you don't have a level of interest, then even though the market's moving and even though you could make money, it's not a setup that's repeatable and it's not a setup based off your playbook. So my biggest thing is being patient and accepting that, all right, I might miss this move here. Yes, the market could sell off. Yes, I could make money off of it. But if it's not a setup that I'm used to, or it's not a setup that it's appearing at all and it's just moving down or up, then I'm okay with missing out on a move, because it's really not missing out on a move if I didn't have a setup for it. And what this does is it eliminates the unnecessary losses, or it eliminates the losses that could have been avoided before entering that setup. And it forces you to really only take higher quality setups that are based off your playbooks. And I kind of did that yesterday. Yesterday, before I took that first short, there was many opportunities that I wanted to be active and look for a setup. And it wasn't until I saw my setup that I acted upon it. And it takes a lot of willpower, it takes a lot of discipline, and it takes a lot of patience. But I'm telling you guys, it's worth it. It's worth accepting missing a move if it's not based off your system, because that will just instill proper habits in the future to only take setups based off your playbooks. And I think that's crucial. Does that make sense? Another thing that I would watch here is 56.24-ish, which is the pre-CPI low. I'm actually going to mark this out on my charts. 63.24 is the pre-CPI low. And this also aligns with yesterday's close. Yesterday's close is 63.24, 63.25. So I would watch this level. It's been a support level in the pre-market session around 3 o'clock Eastern, 4 o'clock Eastern, and then the CPI low at 8:30. So I would watch the 63.24s as well for potential support if the market dips down into that. It also aligns with yesterday's close. Now, again, a possible scenario that could play out, again, a lower probability, lower quality, but it's not to say that we can't make money off of it if a setup appears, is if the 63.24s do break, there's not much stopping the market for selling off into that 63.11 key level. So let's just hypothetically speak here and say the market sells off into the 63.24s and there's a good setup there or there's a good confirmation. Somebody said yesterday's close was 63. Oh, wait. Could I be wrong on that? Let me see. I'm sorry, not yesterday's close. Hold on a second. Now I'm confused. The July 10th close. July 10th close. That was last Thursday, I meant. Yesterday's close was the 63.08s. I meant July 10th's close. 63.24. What I was trying to say here is that there may be an opportunity if that breaks the 63.24s. We could use that as a line of least resistance, meaning if that level breaks with strong aggressive volume, there's not much stop in the market for going into that key level, and we could say the 63.11s is kind of going to be like a magnetic force due to it being such a strong key level. So just something to keep an eye on. It's a hypothetical scenario. It's too early to predict that. It's dependent on what price action does when it's tested, but that's a setup that is also in my mind. Everybody has the July 10th close at the 63.24s. Am I right on that? 24, 25s. All right, good. All right, so some pretty strong selling here. Right at the 63.24s. Yeah, I mean, to me, this is looking. To me, this is looking pretty nice to gauge a pop or a quick little bounce up to see if that gets rejected. So similar to the two-step process, on an intraday perspective, we can confirm the weakness. So now we want to see that weakness continue and those sellers from this sell-off earlier to reject price. So I would like to see the market pop, and if a pop fails, to possibly get active on that, targeting the 63.11s. So what's in my mind right now is gauging a pop or gauging a rally and to see if it rejects or to see if it gets bought up. Pretty aggressive selling coming in here on this pop. There was a pretty large negative 911, now negative 1300 lot delta here at the 63.26s. Let's see if these CPI lows fail here. The pre-CPI low. This looks good to me. Negative 1400 lot at the 63.26s. All right, I'm trying this at the 26 and a halves. I'll feel back above the 30s, 31s is where I'll stop on this. Going for the 63.11s. I just like this aggressive selling at the CPI low. There's weakness intraday, and my whole thesis was to short the pop. As I mentioned earlier, the two-step process. I'm essentially getting in on the first step. We would want the two steps to validate it. But I feel comfortable with the risk there. So let's see a break under the low. The market breaks under the low. Yeah, some more aggressive selling coming in here. It's looking really good. Let's see a strong break under the low. If it breaks under the low, what I'm going to do is I'm going to de-risk myself. So if I see a under 63.20s, which we just got right there, I would like a little more of a flush. There's a larger offer sitting at the 63.23s. The selling is definitely aggressive. There's a 550 lot seller, passive seller sitting at the 23s. I want to see the strength continue under the low. I would not want to see this low break and fail. That large offer did just get filled at the 63.23s. I don't know if I feel comfortable adjusting to break even just yet. What I will do is I will adjust to the 29s. I'll de-risk myself a little more. But to break even is not something I'm comfortable with yet. I want to give this a little more breathing room. There's significant volume activity happening here at the 26s and at the 23s. Rejecting the pre-CPI lows. Remember what I said yesterday and even today. A short trade needs to have closer targets as the downside is going to be limited until the two-step process forms and the two-step process comes into fruition. So always have that in the back of your mind because it's in my head looking to go counter against this uptrend. Higher time frame uptrend. Also, something to keep an eye on is technically the gap will fill at the 63.15s, which is yesterday's high. Technically, the gap, taking extended hours off, would fill once 63.15 trades. So there still is an unfilled gap under us currently. Still rejecting that CPI low very, very well. We got some nice wicks on 3 5-minute candle bars so far. So it's still rejecting that level. So I mean, zooming out so far, even looking on the footprint, we could see like the 6323s. There's just been a significant volume activity there on the 947 range bar. There's a positive 408 delta. And right now in the current 950 range bar, there's a negative 222 and then a negative 263 at the 6323s. So there's just significant volume activity occurring here. I mean, obviously in short, I don't want to say I have a bias, but we want the position to work out. We want to see a strong flush under these 23s, 22s. Just significant volume activity occurring here. Okay. Here's a new low a day. See if it can break. We're definitely consolidating. We're dropping, we're basing, and now we're in the consolidation phase. So we want to see if with that this consolidation phase is met with continuation and not fake out. So here's 63.20's new low a day. 63.19's. More aggressive selling coming in under these lows. 63.19's. So 63.15 I'm a little cautious around. 63.11 is the target I want to see, but I'm a little cautious around the 63.15s because that would be the regular trading hours gap fill, meaning that was yesterday's high. We have a gap up from yesterday's high. Yesterday's high is 63.15s. So just a little cautious around there. So I'm up 2R right now. I'm at 63.18. That's 8 points in profit off of 3.5, 4 points worth of risk. A little over 2R now. I don't know. I'm not comfortable. It's tough to say. I'm not comfortable really moving to break even. Although following my rules, it would make sense to move to break even my stop. So depending on where your entry is, I may move it there if it gets tested with the thought of re-entering if it fails. Just don't know if it's the smartest thing to do at this point in these conditions. So we're 2 points away from 63.15. If we get a strong breakdown into the 63.15s to the 11s, I'll look to cover this full trade. Not interested in holding runners. Just being cautious around there. $63.15s. That's a solid rejection of the CPI lows right there, where I got short. Minus 420 negative delta at the 63.17s. Strong breakdown into the 15s to 11s. Let's get that. I would be cautious there for continuation until it breaks. So right off the bat, remaining objective, you have to be cautious there for the downside. Gap still remains. Another thing too is that like when in a position, obviously you want it to work out, but we have to remain objective. Have to. Meaning not to really marry the idea or marry the trade or marry a bias or marry a direction. You know, just because we want it to work out, that kind of clouds our judgment as humans, emotionally, right? We want this thing to sell off, but if something stops it from selling off, you got to remain objective. I'm not saying I'm seeing anything because I'm not. I'm just saying that in general. Okay, here's a strong push down into the 16s. Gap fill is the 15s. So let's see what price action does there. If we could see a strong push under 15s into the 11s, I'm going to look to scale. not scaled out. I'm not comfortable scaling out a short position on this uptrend. Let's see a strong break into the 15s. Gap fill is officially closed. Yeah, gap is officially closed now. All right, being now cautious to this downside for continuation here. I feel like the best opportunity was to exit there at the 15s. Yeah, I feel like that might have been the best opportunity to exit right there. I have not exited. Shoulda, woulda, coulda, but I should have taken that 2.5, 3R at the 15s. Yeah, this is not something I wanted to do right here. I did not want to be in this rally. I wanted to be out of it. I did not want to be in this rally. I wanted to be covered. That's a perfect gap fill. Regular trading hours gap fill. Taking off extended hours. All right. Let's see what happens. A larger passive seller just filled at the 63.20s. 520 delta. 528 delta. Man, I did not want to be in on this rally here. I wanted to be out of this trade and covered. Come on, give me another opportunity. Give me another opportunity. 15s to 11s. Not a fan of this, truthfully. Really am not. Really am not a fan of this. Yeah, this is the one thing that I did not want it to happen. Expose myself so much to more down to lack of downside continuation. I want it to be out of this damn thing, not sit on this rally. Because now I got to sit on this rally out of hope that it moves down, because it already played out. Now I'm hoping it gives me another opportunity to sell at the 63.15s. I don't like hoping when I'm trading. I won't let this thing go red on me, I'll tell you that. It's just frustrating sitting in this rally, truthfully. Having a 12-point profit on 4 points worth of risk. Do this. Can these sellers save me? We rejected that negative 1179 delta at the 63.26s pretty much perfectly. Never bidded the 26.50s. Um, and it rejected it pretty well. Let's see if this could save me. Truthfully, at this point, I'm in this trade out of hope it goes back down to the 15s to give me another opportunity at the 63.15s to 11s to sell this trade, truthfully. And that's not a proper way to think or trade, because I should have been a little more defensive on the first test of the 63.15s and at least scaled the majority of the trade out there, or got all out. But now I'm hoping this thing continues to go down. So let's see. We rejected that negative delta at the 26s pretty well. And some selling activities coming in pretty nicely. So I don't want to say let's see if we could get lucky, but at this point I'm just relying on the market and the selling activity to give us one more test to the lower day. Out of curiosity, did anybody get an exit at the first 15 test? Did anybody that was short, did anybody get an exit at the 63.15s? I'm just out of curiosity, I'm asking. I wish I did. I got to sit through this and let a $16,000 profit diminish. Or sorry, a $12,000 profit diminish. Ain't a good feeling when you have a $12,000 unrealized profit diminish, truthfully, but just voicing my emotions and voicing where my head's at. How one decision could affect a trade and affect your emotions both positively and negatively. One decision in a split second. The reason why I'm not exiting here is obviously number one, it's kind of against my plan. Number two, my risk reward would be skewed. And number three is what if I exit here? The market still really hasn't invalidated in terms of an invalidation point or stop loss. What if it sells off? You know, that what if is the risk that I'm willing to accept. Is it worth a 3 point gain to feel at ease right now for a potential 12 point gain? That 3 point gain that I have right now, if I were just to exit here, is not worth the or it's not worth the potential of a 12 point plus gain if the market actually does move. I'd rather it go to zero and have a scratch trade than it taking it off early, truthfully. That's just me. Right? Like if I were to sell here for a 3, 4 point gain, yes, I can make money off it. Yes, it's a, a positive trade. But what if the what if is what stays me in this is that what if it does sell off and reject because it really hasn't invalidated or it hasn't hit my invalidation point, if that makes sense. And this is just me, would rather let the trade go to zero for the inherent reward of my target hitting. But that's just me. And to my point also that I mentioned earlier, even in the webinar on Sunday, we talked about this a lot in the webinar and I made it such an important point. Shorting this market in such a strong higher time frame uptrend needs to have closer targets or take short positions off the table relatively faster than you normally would in a different market type of condition. Until the market provides a different reaction, we will not get a different result. Meaning same reaction, same result. The same reaction the past 2 weeks has been pretty much every dip has been bought. So let's see, we're back at the 63.19s. Let's see if it could give here 63.17s. A break under the low a day, I'm getting all out of this trade, truthfully. It's giving me another opportunity here. I'm not going to get greedy with it. 63.16s. Strong break under the 63.15s. I'm covering this trade. No hesitation this time. 63.17s, 63.16s. Come on, break under the lower day. Come on, here we go. 63.16s again. Just give me 2 more points. I would like to see the lower day swept. I would like to see it broken, pick up liquidity. I'll go all out after that. Here we go. Come on. Break the lower day. Come on, 63.15s. Break the lower day and give me an opportunity to get the heck out of this thing. Come on. It's 1.5 points away. Here we go. 63.15s. Strong break under the lower day. I'm getting out of this thing as fast as possible. Come on. Okay. New lower day tested. 63.13s. 63.11s right here. I'm out of this thing. 63.11. All out of this trade. 63.11. All out, 63.11. Let's go. I'm not going to lie, that was very stressful. I'm really not going to lie. That was so stressful because that thing came a tick away from my break even. A tick. A tick away from my break even if it bidded the 2650s. But what you noticed is I did not freak out. I remained calm, remained patient, and just followed the plan. Maybe I got lucky with it breaking the low a day, and maybe I got greedy not selling at the first test of the 15s, but it worked out, and that was a solid trade. Nice little 15-point gain on 4 points worth of risk right there. Almost a 4-to-1. All right, I'm calling it a day there. I'm going to enjoy the rest of my day. An hour in. An hour in. That's it. My job is done. Made money, and now I'm going to enjoy the rest of my day outside of the screens. Peace out, everybody.